Okay, perfect. Now, life insurance industry. Now, first of all, it's quite long, like long established industry. It's already companies, first companies probably appeared in 18th century for this particular company. And one of the companies which we're going to do, the company which we're going to discuss today has very, very, very long history as well. Now, when you look at businesses in this particular industry, very important part to understand here, especially for this particular crisis, that it is a high entry level to this particular industry. So it's not that easy to start insurance business because, first of all, you have to comply to a lot of legal stuff and legal policies. Also, you have to have quite huge, substantial capital in order to provide kind of this insurance security, because if you're not lucky and you started collecting this premium and within first year you have few cases where you have to pay high payment for disability or something else, the companies without capital, they won't be able to do that. Okay, so that's why it's quite difficult to start a business. And when you look at this industry, it's not so many companies in this particular industry. I'm going to show you a bit later. And also the way they grow and expand usually by consolidation. So the bigger companies, they purchase the smaller companies. They kind of acquire them. And the bigger the company, the easier the kind of for them to run a business. It's economy of scale works for them, for this particular business. Okay, also a very important point right now that it is a very tight government control over this particular industries. And the main reason for that is that the structure of this business is very different from other businesses. Okay, the profit of insurance company very often depends on kind of minimum way of paying, like all this insurance payments. Okay, so when something has happened, and if insurance company pays for that, so it's their cost. So I've heard a lot of stories, and personally I've experienced that when insurance companies, they don't want to pay you, they try to find a way to avoid the payment. And I've heard in the United States, there were quite a lot of legal cases where insurance companies, they were trying to kind of postpone the payment to critically ill people. And they brought to the situation when people died, okay? And as a result, they didn't have to pay for example, for disability or for treatment, etc., etc. So that's why a lot of people, investors, they kind of avoid insurance industry because they believe that it's not always ethical. Same as some people, they don't invest in like in drugs, or not drugs, I mean guns. They don't invest in alcohol. They don't invest in tobacco business and stuff like that. So some people I know, they avoid investing in insurance industry as well because they believe that it's not always kind of good, because the profit of the investor, it means that the customer of this particular company doesn't get a lot of benefits out of that. All right, so I don't know if you experienced something like that. I had a life insurance since 1998, and my policy was expired in 2013, and it took me nearly 4 years to get money out of them. It was like a specific insurance policy where I was supposed to get my money back in the end of the term, but it took me 4 years to get the money back because of different issues which they created. At least I believe like that. All right, so something like that. So the next important thing that when the company collects the money, they cannot spend the money straight away. They have to keep the cash in case of this kind of insurance problem arose there. So they would have to pay those benefits to the client. Okay, that's why they have to keep it in a liquid condition. They usually don't keep it in cash. They put it in a kind of security which they can convert quickly to cash. And majority of time that would be bonds. Okay, some companies they put in stocks. If you know that, if you heard probably Warren Buffett loves insurance companies because the companies which he owns, he takes that cash and invests it in the stock market and creates high income. And even if the insurance company is not profitable, he makes money by reinvesting this cash, like free cash for him, into different businesses. All right. Yeah, majority of companies, insurance companies, they put money in a bond market. So they usually buy government bonds, long-term bonds or short-term bonds, and part of their income is coupon income, which they receive from the interest on that particular bonds. And that's why a lot of companies, they fell down in prices right now because people believe that it will affect quite significantly the income, because at the moment majority of countries they reduce the interest rate in order to kind of sustain the economy, or like they reduce the effect of this pandemic. And that's why they believe that the bond income is going to be reduced. But if you understand the bond market, you probably know that when the interest rate goes down, the price and price for bonds usually goes up. Okay, and if I believe if those insurance companies they already have a lot of money or capital invested in bonds, it means that yes, they're going to have like from percentage terms less income from future investments, but at the same time, whatever bonds they already have, they increase in the prices, because when the stock market goes down, usually bonds they go up. Not always, but in when the interest rate goes down, that's what exactly happens. All right, so that's why we might see that insurance companies, these specific insurance companies, they might show good profit during next quarter if they close their position and they sell their bonds. All right. Now, if we look from the client perspective, majority of these insurance companies, they deal they can deal directly with clients, directly with customers, which go and buy insurance policies. So it's kind of individual, but also they deal with businesses. So this particular company might come to the factory, and the factory insurer like buys insurance or pays for insurance for their employees, like damage insurance, life insurance, disability insurance, in case something happens on their manufacturing facilities, and they will be covered from that particular cases. So that's why when you go for travel or you're going skiing, you might buy some kind of insurance in case if you break a leg or something happens to you, but at the same time companies buying for their workplace this particular insurance. Now, and of course the fear of this pandemic, people don't know how it's going to be, like this industry going to be affected, and that's why the price fell down quite a lot, and together with the different indexes which we already looked at. So life insurance industry is different from the car insurance industry and different from the property insurance businesses. Okay, because in life insurance industry, it's very difficult to find like when we looked at property insurance market, and last year we had this huge tornadoes in the United States, and it was affected. A lot of houses were affected, and the insurance profit, like profit of insurance companies went down quite a lot because of that, because they had quite high level of payments to their clients, insurance payments. Whereas in life insurance industry, it's quite difficult to find that a lot of people instantly will get damaged at a certain point, or they will die because of critical illness, or they get a lot of disabilities. So this specific insurance, it's quite stable in the percentage terms. So that's why insurance companies in this particular area, they are quite profitable if we look at their performance. If we go to value line probably says exactly the same which I just described, and they have quite positive outlook for insurance companies, even though they believe that there would be some volatility in the price levels, but they're quite confident in the long term of this sector. And if they advise to allocate money to few companies, first it's Atlas, it's Financial Strength A, Globe Life, and MetLife. So these three companies which we're paying attention. But as always, if the companies are very strong and good quality and etc., and everyone knows about those companies, so they're usually overpriced already as it is. So, and when we compare these companies and the company which we're going to discuss tonight, you will see that the price level is very, very different. So our company, Unum, is right here. So it's not as big as other players, although from disability insurance, it's quite one of the biggest in this sector, because all of them, they have different areas where they insure people. Okay, something like that. Now, what I've done, I went to value line, and I just did a small screen process. So what I've done, I chose the insurance life industry. There were 23 companies in that. And then I added only a couple parameters. For me, at this particular moment, were important the trend, the growth trend from income perspective. So I took and I decided to find companies with a growth rate more than 5% over the last 5 years, like annual, and 5% in the future, the projection growth. And as a result, out of 23 companies, only 8 companies left. So what I've done then, I downloaded the data about all these companies and inserted them in FinViz. So just in order to quickly compare all these companies. So also I added optionable shortable, because I like options. And also I chose United States. And the reason for that, that I know that in different countries, especially third countries, people abusing insurance companies, so they can create fake damages or something like that. They break their own bodies, or even I know that in some cases what they do, they insure somebody and then they do something with that person and they get insurance for that specific person. Okay, so it doesn't happen. This situation like that doesn't happen in the United States, so I presume it doesn't happen. So that's why I would rather work with insurance companies in stable countries. Now, what I've done here, I chose like by PE here company. So we can see that Unum is the lowest PE right now. It's 3.2. Usually companies which are facing bankruptcy priced in this in this kind of type of low PE ratio, 3.2, so very, very low. Okay, forward PE is 2.75. It means that they're expecting to grow during this year, their earnings. And if we look at some companies, also the forward PE is lower, here low PE is lower. So majority of them, if we look like a few companies here, their forward PE is low. It means that at least these 7 companies, which included here, they are expecting a growth within next year. So it gives us certain reassurance that the whole industry not as bad as a lot of analysts expect about the whole industry, the whole economy in general. So, and also if we look at technical graphs, so we can see they're very similar looking. So it means that it's not the problem within one particular industry. So for example, if we see that Unum dropped quite a lot in price, so but then when we look at different companies, it's exactly the same. So it means that this issue is not within one specific company, it's within the whole industry, right? And but when we look at the whole industry, their performance not as bad as in some other industries, for example, retail, airline industry, right, oil industry right now, or other businesses as well. So here we're going to look in details already how it's going to be affected, but still low price and pretty stable future in any way. So that's how look. General overview of the whole industry. That's how it's look like. So if you have any comments about that, please put. Okay, so Gina put the people who died because of coronavirus, do they get their life insurance paid? It's actually a very tricky question, because when you get insurance, they have all the small prints. Okay, and in a lot of cases, for instance, I know the cases like that in Russia. It was that if people created suicide, they wouldn't get paid. Okay, if people were drunk and, for example, they would arrive in the car and they died because of their drunk condition, they wouldn't get insurance because they were drunk. If they were sober, they would get it, but because they were drunk, they wouldn't get this insurance. So, and then if it is damage or some kind of incident where they can tell, look, coronavirus is not an incident. So you always have to look at the policy which people sign. And in reality, Gina, like I've looked at so many different reports, doctors' reports, and they say that level of death from coronavirus is not higher than from the other virus infections which we already experienced in the past years. Okay, so I don't think that there would be a spike in insurance payments because of coronavirus. And also probably because this specific company, which we're going to analyze now, they're not dealing with just health insurance. They're dealing with a life insurance. Although I don't know, like in this particular case, I wouldn't tell you if a person died from coronavirus, are they going to be paid like people or not. So probably it's better to contact insurance policy and ask them in this case. But I don't think so. I don't think so. Personal opinion. All right. So all clear about the total industry. Put pluses or numbers from 0 to 10, how clear it is, and we'll go forward and we'll try to analyze the company itself.